Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on SOFI Technologies. Is this company a sleeping giant poised for extreme growth over the next 3 to 5 years? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. It definitely helps. And consider subscribing. Hit that notification bell for your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So SOFI Technologies is formerly Social Capital Hedosophia Holdings Corp 5. It's a member-centric digital financial services company. Now, the company does allow members to borrow, save, spend, invest, and protect their money. The company has developed a financial services platform to offer products to members and meet their financial needs. Now, the company operates through 3 segments: lending, financial services, and technology platform. Its lending segment offers multiple loan products such as student loans, personal loans, and home loans, among other loans. Its financial services provides financial cash management, investment services across its SOFI Money, SOFI Invest, credit card, and relay products. Its technology platform operates a technology platform services, which is Galileo, and a clearing brokerage services, Apex. Now, the company's mobile application is available on iOS and Android. Now, let's go ahead and look at some of the news that's recently popped up and why the stock has jumped up over the past week. So Pagaya Technologies, which is a financial technology company that enables financial institutions to expand access to more consumers through its artificial intelligence network, today announced its new partnership with SOFI. The new partnership will enable SOFI to broaden its members' access to its financial products. Now, Pagaya's proprietary artificial intelligence technology and infrastructure enables fintechs, banks, and other loan providers to offer consumers more robust access to financial products outside the existing traditional credit models. Think of Upstart, which I just reviewed yesterday. So Pagaya's machine learning models are designed to reduce risk for lenders and help better inform credit decisioning. Now, the company partnership with SOFI is the largest deployment of its technology in the fintech marketplace to date. Now, Anthony Noto, CEO of SOFI, stated that we are excited to leverage SOFI's sophisticated tech platform, strong brand, consumer appeal to originate loans through Pagaya's AI network, extending its business to a broader audience so more people can access credit and achieve their financial goals. I definitely think this was a great move, strategic move for SOFI to expand its product offerings. But now let's go ahead and look at some of the fundamentals of the company right now. So the current stock price of SOFI is around $20.85 a share, roughly. The current market capitalization is about $16.6 billion. Now, the company is currently unprofitable and is projected to become profitable at the end of 2023. Now, the revenue in 2020 was about $565 million, with negative earnings of $317 million. Ouch. And the revenue in 2021 is projected to be roughly $966 million, with a negative $484 million in earnings. Now, if you look at that number, it's increased from 317.44, but they're investing a lot of money in their technology. I'm not going to go into their actual financial data at the moment. Now, the forward-looking projections of SOFI with $1.45 billion in revenue by the end of 2022, with an estimated negative earnings of only around $218 million. Now, where the stock gets real interesting is the revenue projection in 2023. It becomes around $2.08 billion with a positive earnings of $28 million. So it definitely, breaks even around 2023, at the end of 2023. Now, these, of course, are just analyst projections, but the future looks bright for SOFI. Now, looking at the valuation analysis, because the earnings of SOFI are negative right now, the price to sales and the price to book ratios are the most appropriate appropriate valuation measures. Now, you know, SOFI seems highly valued with a price to sales ratio of 17.32 times, one of the highest in the consumer finance industry. However, their price to book is only 3.82 times, above the industry median of 1.32 times. Now, looking at its financial position, SOFI's short-term assets of $5.5 billion exceeded both its short-term and long-term liabilities. The short-term liabilities are $308 million, and its long-term liabilities are $2.8 million. So they definitely have a lot there. So SOFI's debt-to-equity history has been improving, and the debt-to-equity ratio of 53.7% is considered high, but that's significantly been improving over the past few years, especially over the past year. Now, looking at its cash runway analysis, SOFI does have less than a year of cash runway based on its current free cash flow, but for me, I am not that worried about that based on an increasing future revenue projections. Now, earnings are forecasted to grow about 69% per year over the next couple of years, and they should become very profitable very, very soon. Let me bring it back over here. Now, looking at the ownership breakdown, here's one thing to focus on. 29% of shares are owned by institutions. 48% roughly are owned by the general public. Now, I'm going to be keeping my eye on the institutional share percentage of SOFI. I predict institutions over the next year or two will be buying more of SOFI shares. Institutions look at more of the long-term viability play on the company and less sensitive to the news cycles. The trend has increased from 11% recently to 29%. So I will come back in a year and look at this video on my statement of my future prediction of that. Now, with 48% of the shares owned by the general public, you're going to see a greater fluctuation in the stock price because retail investors are extremely sensitive to any type of news that comes out. So what do the analysts say about this company? So the analyst consensus right now is a strong buy with a 12-month price target of around $24 a share and with a high of $30 and a low of $16 a share. Now, I couldn't find too many analyst reports going into great detail on what they think of SOFI, but I did find that Morgan Stanley analyst Betsy Graysick on October 11th gave the company an overweight rating and a target price of $25. So am I a buy, hold, or sell recommendation on SOFI? Here are my thoughts. SOFI has to stay top of mind with Gen Y and Gen Zers among all the other top tier challenger fintechs out there. And yesterday I just reviewed Upstart, so check out that video out as well. The link is up above. SOFI has a lot of potential and has gained a lot of traction with its younger customers with its wide range of financial services offerings being offered. Now, the problem lies that growth stocks like SOFI don't follow a straight line, and volatility is likely in the near future. SOFI's stock price will most likely be sensitive to revenue growth numbers in the short term. I can see SOFI being able to triple its customer base. Yes, I said triple, and quadrupling its revenues over the next 4 years. Given the growth and revenue opportunities of SOFI, I feel that it is extremely undervalued right now. I wouldn't say extremely undervalued. I would just say undervalued based upon the extreme revenue and growth rates in the future. So I am a long-term bull on SOFI, but let me explain why and give my stock projections. When I say long-term, I mean 3 to 5 years. SOFI is a long-term bet on the development of the fintech industry, and the SOFI's growth I feel is too cheap to ignore. The stock price currently had a big boost on the news of the recent partnership with Pagaya, and I would target an entry price of around $15 to $17 a share once the news cycle subsides and you buy on the next dip, or you can hold for the long term, or nibble your way down with dollar cost averaging the stock. So let's just hope the stock makes a run like it did Upstart has over the past couple months. It is also important to note that financial services companies need to entangle their customer base not only with one product, but with many. I call it the octopus principle. The more tentacles you have on a consumer, the higher the probability that one consumer returning for additional product offerings is almost certain. On the consumer side, these additional services and products include mortgages, personal loans, credit cards, and new investing products like cryptocurrencies. Now, SOFI offers small and mid-sized businesses its financial services API and digital payments platform, so they need more of a commercial space as well. But we also have to discuss the risk of SOFI that might hinder this analysis and cause them not to flounder, but to stagnate. I don't see this company ever floundering. I say the risk might have its stagnation. So SOFI needs a deeper commercial presence, and while they are expanding services and cross-selling, have cross-selling potential, SOFI will need to keep an eye on its customer retention and really keep an eye on that customer retention. And when it starts falling, figure out exactly what's going to go, what's going on and how to change it. Now, as well as there's other fintech rivals that pose a threat to SOFI's customer acquisition and monetization plans, because barriers to switch companies are low, in the personal loan space. And other spaces, it's easy just to switch financial services companies like that. So, they compete mainly on the margins, on the fringes. So there you have it, folks. I am a long-term bull, and I'm going to say a price target of $50 to $60 in a year and a half. You had it. Yeah, I'm quoting it right now. $50, $60 in SOFI. Now, there's going to be some swings. Oh, let me talk about those short-term investors out there. You can definitely trade those swings right now, because on any of the news, it's just going to be going up and down like that. It's just going to be a wobble all the way to the top. Now, let's hope it has a run like Upstart. Let's just hope that. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like their daily stock reviews and recommendations from an unbiased source. I'm also going to be adding weekly and daily market updates on the overall market, so we get to see a broad range, not just singular stocks that we're reviewing on a daily basis. I want to look at the broad economic, macroeconomic view of the markets in general. So stay tuned for that. Ciao.